Look at the financial reports of today's tech giants, and you will see staggering, record-breaking profits. These companies are pouring hundreds of billions of dollars into artificial intelligence, driving a historic expansion in infrastructure. But financial experts and analysts are sounding an alarm. A significant portion of these eye-popping financial numbers may be less substantial than they appear. Instead of representing actual organic demand from the outside world, billions of these dollars never actually leave the Silicon Valley ecosystem. They are simply being passed back and forth between a small circle of companies. It is an accounting mechanism known as circular financing, or round-trip funding. Deciphering these internal loops is the first step towards seeing which parts of the AI economy are built on solid ground, and which are made of paper. Imagine investing $100 into a startup bakery. But there is a catch. The bakery must use that exact $100 to buy flour directly from you. Through accounting magic, you record a new sale, and the bakery records new funding. On paper, both balance sheets look successful, but zero actual new money has entered the economic system. The cash just walked out your front door and came right back in through the back. Map that exact same bakery loop onto the biggest tech companies on Earth. Right now, giants like Microsoft, Amazon, Google, and Oracle are sitting on roughly $2 trillion in future cloud computing commitments. The concentration risk here is high. Over half of that massive $2 trillion pipeline is anchored by just two startups, OpenAI and Anthropic. Take the relationship between Amazon and Anthropic. Amazon poured billions of dollars of investment capital into the AI developer to help them train their models. Concurrently, Anthropic committed to spending roughly that equivalent amount of money renting Amazon's AWS cloud infrastructure over the next decade. These tech giants are writing checks to startups, which then return that capital as server rent. It allows the giants to book the money as fresh commercial revenue. This loop is driven from the very base of the ecosystem. Hardware manufacturers like Nvidia are pouring their own billions of investment dollars into AI companies. Startups like OpenAI then take those exact investment funds, turn around, and purchase massive quantities of Nvidia's specialized computer chips and processing power. As one MIT professor assessed it, we are watching a $100 billion back-and-forth flow of capital between Nvidia and OpenAI. This table, Exhibit 6, shows the scale of OpenAI's hardware dependencies. The company has struck agreements totaling an estimated $1.4 trillion for computing capacity with various tech giants, suggesting this is a systemic pattern. With all this capital sloshing back and forth, it becomes difficult for an investor to measure how much organic demand actually exists for AI products in the real world. Supporters of this system offer a bull case, arguing that this circular loop is a necessary infrastructure strategy. Building global AI infrastructure requires capital on a scale we rarely see. By pre-baking spending into these investment deals, tech giants can fund the expensive hardware supply they need while simultaneously securing a built-in customer base. But critics offer a bear case, warning that this practice creates a deceptive image of market demand. They point to the 2001 dot-com crash. Back then, telecom equipment makers used vendor financing to loan money to internet providers to buy their servers. That scheme collapsed when real-world internet usage failed to match the artificially inflated revenue figures. Today, this creates a systemic tension. If one major player in this tightly woven financial loop stumbles, the entire interdependent house of cards could come under pressure. The market is shifting its focus away from raw growth and toward a much harder metric: self-sustainability. The test for survival is whether AI can generate enough revenue from external, non-tech customers to pay off these massive infrastructure debts. And there is a ticking clock. Nvidia's CEO recently signaled a potential pause in this round of aggressive investments, meaning the external revenue needs to materialize soon. Which leaves us with a multi-trillion-dollar question. Is the AI boom as stable as the numbers suggest, or is it a loop waiting to break?